Good morning, guys. Happy Monday. It's April 21st, 5:27 a.m. Central Time. Hope you guys had a nice holiday weekend. Grain markets are mixed this morning. May corn futures up 3.5 at 485 and 3/4. May soybeans up 4 at 1040 and a half. May Chicago wheat up 1 1/4 at 550. May Kansas City wheat down 1/4 cent at 557 1/4. May spring wheat is unchanged at 606 1/4 last trade. We had some vessel fee news out late last week. Let's start there.
The Trump administration has scaled back its proposed fee on China-built ships. Last week, the U.S. Trade Representative revised its initial plan, which would have imposed fees of up to $1.5 million per port call. The global shipping industry strongly opposed the proposal, arguing that the fees would reduce the competitiveness of U.S. exports and significantly raise costs for American consumers. Under the revised plan, affected vessels will be charged once per voyage with a maximum of 6 charges annually. Additionally, empty ships arriving to pick up bulk exports, such as grain or coal, will be exempt. The new fee structure is set to take effect in the next 6 months.
This was generally seen as being maybe a positive for export prospects because it's not nearly as limiting as what we thought it could be. Couple of things to be aware of, and I had to kind of go down into the weeds in this. The first one is the delay, and that it's what is it, 6 months or
Yes.
whatever. Okay, so
Yep.
that's a big positive that you got 6 months. And then the second thing, when you really go into this report and the determination, there's this section where it says targeted coverage. I'll read through some of this. I'm not an expert on vessel fees or shipping, but I'll tell you what I learned here through my research, we'll call it. Targeted coverage. The fees imposed in this annex do not apply to U.S. government cargo. The fees imposed in this annex do not apply to the following Chinese-built vessels. 1, U.S.-owned or U.S.-flagged vessels enrolled in the Voluntary Intermodal Sea Lift Agreement. Don't ask me what that is. The Maritime Security Program, or the Tanker Security Program, or the Cable Security Program. The next one is vessels arriving empty or in ballast would not be targeted. And then this one is important. Vessels with a capacity equal to or less than 4,000 20-foot equivalent units, 55,000 deadweight tons, or an equivalent bulk capacity of 80,000 deadweight tons. That last line, an individual bulk capacity of 80,000 deadweight tons. A lot of our grain, soybeans, they go out on what's called a Panamax vessel or ship. And a Panamax, the reason it's called a Panamax is because it was designed to specifically fit through the original Panama Canal locks a long time ago. But in any case, the deadweight capacity of a Panamax bulk carrier is 65,000 to 80,000 deadweight tons, which would make it exempt, which means that a lot of the corn, soybeans, wheat, whatever we ship that goes out on these bulk carriers is probably going to be exempt. So this was a big fear of the corn, soybean, wheat industry. Exporters had a lot of concern here. And now the way that it appears, most of our grain shipments would not be affected. So this is overall a big time positive. Is it bullish the markets? No, but it's not a big bearish item, and that is seen as being this is good news for us.
Weekend rainfall impacted parts of the U.S. Corn Belt and U.S. Plains. Parts of Oklahoma and Missouri saw totals of 5 inches or more over the last 72 hours. Portions of Iowa, Illinois, southeast Minnesota, Wisconsin, Indiana, and Michigan saw lesser amounts. The Southern Plains and Southwestern Corn Belt are slated to see the largest rain totals over the next 7 days. Lesser rains will impact other areas of the country.
Have you ever heard the thing about if it rains on Easter, it's going to rain the next 7 Sundays?
Yeah, I actually saw something about that on social media, so I hadn't heard about it until yesterday.
No, it's been out for like 1,000 years. That's what people
Right,
have
of
said.
course,
If
but
it rains,
I was just informed about it recently.
so apparently, if you caught rain, it's gonna be a long spring for some of you guys if it rained on Easter. In any case, yeah, we had some rain. This was actually maybe the more interesting weather item that was out last week. This is the seasonal precipitation outlook that was out from the government, and it's 3 months, so it's May, June, and July. This is supposed to be the forecast, and it would indicate that you've got a probability of drier than normal weather in the plains and the far western corn belt. Most of the higher probability of below normal precipitation would be outside of U.S. corn and soybean areas to the west. I guess you got some chances of above normal precipitation. I probably wouldn't read, or I'm sorry, above normal temperatures. That would be the map on the right. I probably wouldn't read much into the long-term forecast. I know that some people do. I only look about 7 days ahead.
USDA released weekly drought monitor data on Thursday. The Corn Belt was mostly dry last week. Drought conditions remained largely unchanged. However, some areas saw slight changes. Conditions improved in southern Minnesota, northern Wisconsin, and the western upper peninsula of Michigan. Drought conditions slightly expanded in northeast Missouri and southeast Iowa. The high plains were also mostly dry, leading to drought conditions worsening in eastern Nebraska and across western and east central Kansas. When we look at the percentage of U.S. areas experiencing drought, corn country 30%, soybeans 23%, winter wheat 34%, spring wheat 43%, and cattle country 38%.
Some of the forecasters out there who are talking about the potential of summer drought this year are thinking it's going to be more of a Western Corn Belt thing than an Eastern Corn Belt thing. And that's what the Drought Monitor would indicate right now. Now, we saw a little bit of improvement, I guess. You've still got all that drought down in the Southwest and Texas and New Mexico and Arizona. And people think that perhaps that could push up into the Midwest. And maybe it does. It's very early to be talking drought, but people are talking. So there it is.
If you guys have not checked out our premium content, you sure need to do so. Joe, can you tell our viewers about some of our recent premium videos?
We did Macro Thursday with Jim on Thursday. One of the things we talked about was China, IP theft versus cheap labor. So China takes U.S. ideas and ideas from U.S. companies, and they steal them, and then they sell them at a discount. And that's one of the reasons why we have a trade war. And we tried to weigh that versus the cheap labor. Like, can we in the United States, can we have our cake and eat it too? Can we get the cheap goods produced via cheap labor in China and also at the same time eliminate the IP theft? It's tricky. One of the most interesting things Jim said, I'm going to try to get him back for a follow-up because I had a ton of questions about it. Jim had a super interesting theory about the Fed, interest rates, and commodity prices moving forward. And it was so interesting, and I didn't realize how interesting it was in real time. We're going to try to get him back. I think he might be on vacation, but in any case, we'll try to get him back for a follow-up on that. Matt Bennett was on Wednesday last week. I haven't sold any new crop and other grain marketing questions. What should I do? Fantastic stuff. 20 questions with Matt is something we do every other Wednesday. If you guys want to see the premium stuff, go to standardgrain.com. You can sign up this morning. It's a $50 per month subscription. You can cancel it anytime. No other fee, no other obligation. Nobody will try to sell you anything else. This is an information-only service. We just want to charge you $50 and send you our info. Remember, guys, if you're listening on the podcast or watching on YouTube, we have no sponsors. We're not backed by any corporation or anything. Farmers and grain market professionals, I guess, are the people who make this show possible because they buy the premium subscription. We'll never, ever, ever make enough money doing YouTube or the podcast to actually pay for it. This is a big loss leader for us. So we don't really make any money here. So check out the premium deal, premium subs. We love you to death. What's next?
The funds substantially increased their net long position in the soybean market last week. CFTC released weekly commitment of traders data on Friday. During the week ending Tuesday, April 15th, large money managers were net buyers of 71,000 soybean contracts. The net long of 43,000 contracts is the largest since the first week of February. The funds were also net buyers of 14,000 corn contracts and 4,000 contracts of SRW wheat on the week.
What do the funds know about the soybean market that we don't know? They're net long ahead of the U.S. growing season while we're in the midst of what appears to be a full-blown trade war with China, our largest soybean buyer. I don't know. Are they trading momentum? Are they trading an inflation trade? Are they trading a long commodity trade? It's tricky to say. So they're long row crops, still sticking with this short in the SRW wheat market. And that for a long time has been kind of the short leg of the grain complex spread, I guess, for large money managers.
Japan is considering increasing soybean and rice imports amid ongoing trade negotiations with the U.S. During last week's discussions at the White House, the Trump administration pressed Japan to lower market barriers. The administration also urged Japan to increase imports of other agricultural products such as meat, seafood, and potatoes. As part of his reciprocal tariff policy, President Trump has proposed a 24% tariff on Japanese imports. Although this and other reciprocal tariffs have been paused for 90 days, a 10% universal tariff remains in place. Despite reaching no agreement and disclosing no specific details, Trump described the trade talks last week as making big progress.
There were a bunch of false reports all over the place that there was actually a trade deal struck last week. That is not the reality of the situation. In any case, it appears as if we're making progress with our two biggest corn importers. Japan, we're making some progress. Mexico, it was reported also that we've made some progress. Japan, it mentioned soybeans here. They're not a big soybean importer, 3.5 million metric tons this year. don't ask me about rice. You can find rice markets and other stuff and listen to that, but I don't know anything about it.
U.S. ethanol exports have risen significantly compared to last season. Just 6 months into the current marketing year, exports have already exceeded the 1 billion gallon mark, representing a 27% increase from last season. The sharp rise in ethanol sales has contributed to an 11% year over year increase in exports of U.S. grains in all forms. Canada remains the leading importer of U.S. ethanol, with purchases up by 19 million gallons compared to the same period last year. The European Union is the second largest importer this season, with imports up 78% year over year.
Yet ethanol stocks are at COVID lockdown levels, despite the huge surge, not huge surge, but surge in exports. So I think that some people are still slightly puzzled by the high ethanol stocks. They were down last week, I think, and I would imagine moving forward they'll move lower as they typically do as we get into driving season.
U.S. corn export sales increased substantially last week. Net corn sales were reported at 61 million bushels. The print was up 99% compared to the previous week and 39% from the prior 4-week average. Mexico was the largest corn buyer for the week. Net soybean sales were reported at 20 million bushels. The print was up noticeably from the previous week and up 74% from the prior 4-week average. Mexico was the largest buyer. Net wheat sales were sluggish at 3 million bushels. The print was down 29% from the previous week, but up 2% from the prior 4-week average. The Dominican Republic was the largest wheat buyer for the week.
Let's just jump to corn. The book of sales is the second best of the last 10 years. And you can make the argument at this point that USDA may have to come up again with its projection for U.S. corn exports for the current marketing year. Could be 50 million, could be 100 million. You could end up with a carryout that's absolutely south of 1.5, maybe closer to 1.4, maybe even south of that for the United States, depending on the pace of sales and shipments during the remainder of the marketing year. But very, very strong. And again, the United States is really the only game in town when it comes to corn exports for another few months until that second Brazil crop comes online. So we're competitive and we continue to do business.
We had a cattle on feed report come out on Thursday. Excuse me. Cattle on feed as of April 1st were reported at 11.6 million head, 2% lower compared to last year and steady with pre-report estimates. March placements were reported at 105% of last year's levels, more than 1% above expectations. Marketings in March were reported at 101% compared to last year, steady with expectations. The market will likely view this report as neutral to slightly bullish, given the year-over-year placement comparison.
Yeah, it looks pretty neutral to me. I threw some long-term cattle charts in this morning. It's still a bull market. I mean, there's a lot of volatility in these ranges. Like you look at this regression channel that I've got here, and it looks pretty tight. But I mean, you can move 10, 15 bucks in either direction and maintain this uptrend. Feeder cattle is very similar, still very strong markets. Yeah, maybe we open a little bit lower this morning on that news, but I don't even know that has to happen. Outside markets here on Monday morning, the stocks are lower. Dow Jones is down 370. The S&P is down 58. Bonds are off a little bit. U.S. dollar is sharply lower, and that is going to see that's going to be positive for the grain markets, and that may be a bigger factor than some people think this year. Crude oil is lower to start the day. Gold up sharply, over $3,400 in the COMEX contract, up $78. Have a great week, guys. I'll be back on Tuesday.